Nationalization, have you taken fright on that word entering the system and what it means longer term for investments in South Africa?
Yes, that's a very bad sign when people start talking about nationalization, because what it ends up to be is low productivity and losses for the country. And we've seen that in many countries around the world. Yes, it's no question that the natural resources of a nation belong to the nation, but then you can make arrangements for other people to help you exploit those natural resources, and that's the way you've got to look at it.
What would cause you to pull out of South Africa?
Well, if there was wholesale nationalization, if there were exchange controls where we couldn't get our money out easily, I think those would be the two big factors, because nationalization naturally leads to expropriation, which is what happened in Venezuela. So we wouldn't want to be in that scenario.
Budget 2010 recently released in South Africa, and the market was panicking about whether we would see inflation targeting remaining the firm mandate of the South African Reserve Bank. Did that concern you at all?
Of course. South Africa has to grow at 8-9% in order to really achieve what the population wants to achieve. In order to do that, the economy has to be freed up. You've got to eliminate import duties. You've got to allow textiles to come into the country so that you can export textiles. And these kinds of efforts are essential for the growth of the country. Now, with that growth, you will see inflation coming down because you'll see productivity rising. So all of this plays together. You cannot have lower interest rates unless you free up the economy.
Let's talk sectors, and which sectors are most attractive to you in South Africa if we look across the space: industrials, financials and resources.
Of course, resources, number one. We are big on resources.
Because you believe in the China growth story.
Exactly. China, not only China, but also India and other countries around the world who are increasingly demanding more of these resources. The other thing is in the consumer area, particularly consumer banking. We like the banks here. Some of them are very, very well run, and there's an opportunity there. The other areas in specific industrial areas, companies that are branching out into the rest of Africa and into the rest of the world. This is one of the most interesting things about South Africa. Many of your companies have become global in their outlook, and that's very, very good, I think, particularly going into emerging markets.
How important is Dividend to you? In a tough economic environment, as we've seen, a number of investors put it as their number one criteria for picking a stock.
It's a criteria, but it's not the be-all and end-all. We want companies to grow, and we don't want them to sacrifice growth for dividends. However, we prefer dividends over buying back shares, because buying back shares tends to tighten up the supply, and you have a problem, in liquidity in the market. But I would say we like companies, of course, that pay dividends, but also that grow. So you got to balance that.
Interested in your view on the rand, given the fact that your big play in South Africa, as you've said, is resources, but you've seen the spate of results out recently, and the mining companies are being crucified by the stronger exchange rate. Where do you think that the rand is going to go? Does it play a big role in your investment philosophy?
It does play a role in the sense that we've got to look at it in the context of an individual company. For example, if a company is exporting, obviously you don't want a strong currency. If they're importing, you want a strong currency. So we look at a company in the context of where we think the currency should be. At the current time, I believe that the rand is slightly overvalued. So we would like to see a weakening of the rand. Well, now, whether that's going to happen,
well, I was going to say, whether it's going to happen is another story.
But I think it would be good to have it weakened from where it is now. I'm not predicting that it'll happen, but that's what we would see. The best predictor longer term is price parity. In other words, the comparison of inflation in the U.S., if you compare it to the US dollar, versus inflation in South Africa. If inflation in South Africa is higher than inflation in America, then the rand should get weaker. So that's the kind of analysis we do.
In South Africa, the biggest risk as an attractive investment destination, in your view, if you can just take us back to your thoughts on that.
I think the biggest risk is at the government level. If a government tries to expropriate, tries to nationalize, and is not willing to free up the economy, is engulfed in a lot of corruption, then you have a real problem going forward. to growth.
Your comments on other consumer stocks, you've said that the banking environment is attractive. Do you look further afield into consumer stocks, the retail stocks, that the cash retailers that have the growth opportunities into the African continent?
Yes, we have. And I must say the companies here, not only the retailers, but particularly the retailers, are very well managed. You have terrific managements here. I would say South Africa gets the highest marks among emerging markets for management, good managerial capabilities. And you can see companies like South African Breweries, SAB, has done so well globally, and it's because their management is so good. And I think that's true of many, many other companies in South Africa.
And Mark, just finally, one more element of advice to those investment managers wanting to follow in your very successful footsteps.
Be optimistic. The world belongs to optimists.
Thank you very much for your time. That was Dr. Mark Mobius, the Executive Chairman of Templeton Asset Management.